March has arrived, and with it comes an important update for millions of seniors across the United States who depend on Social Security benefits and any potential stimulus-related payments to manage their monthly expenses. This direct update is designed to clearly explain what is happening with Social Security deposit dates in March, how payment schedules work, what retirees, SSDI recipients, and SSI beneficiaries can expect, and how any discussions around stimulus support may affect households this month. Everything will be explained in simple and respectful language so that anyone, regardless of financial background, can understand exactly what these updates mean and how to prepare. Social Security remains the financial foundation for a large portion of older Americans. For many retirees, it is the primary source of monthly income. These payments help cover housing, food, medications, insurance, transportation, and everyday living costs. Because of this, knowing the exact deposit dates in March is extremely important. Social Security payments are not random. They follow a structured schedule that is determined mainly by a person's birth date and the type of benefit they receive. Understanding this structure removes confusion and helps beneficiaries plan their budgets with confidence. For retirement benefits and Social Security disability insurance, payments are typically distributed on Wednesdays throughout the month. The specific Wednesday depends on the recipient's birth date. Those born between the 1st and the 10th of the month generally receive their payment on the second Wednesday. Those born between the 11th and the 20th receive payment on the third Wednesday. Those born between the 21st and the 31st receive payment on the fourth Wednesday. This pattern continues consistently each month unless a federal holiday affects the schedule. In March, this structure continues without major disruption, allowing most beneficiaries to expect their deposits according to this standard calendar. There is a different schedule for individuals who began receiving benefits before May 1997 or who receive both Social Security and supplemental security income. These beneficiaries typically receive their Social Security payment on the third day of the month. If the third falls on a weekend or federal holiday, the payment is issued on the preceding business day. This adjustment ensures that funds are available without unnecessary delay. For seniors who carefully time bill payments around deposit dates, these small calendar adjustments can make a meaningful difference in financial planning. Supplemental security income follows its own pattern. SSI payments are usually issued on the first day of the month. If the first falls on a weekend or holiday, payment is delivered on the last business day of the previous month. This sometimes results in 2 SSI payments appearing in one calendar month. Though it does not mean extra money is being provided, it simply reflects a scheduling adjustment. Understanding this detail prevents confusion and helps recipients avoid mistakenly believing they have received an additional benefit. March often brings increased attention to Social Security because it falls early in the year, shortly after annual cost of living adjustments take effect. Cost of living adjustments, often referred to as COLA, are designed to help benefits keep pace with inflation. When inflation rises, benefit amounts are adjusted to protect purchasing power. By March, beneficiaries have typically received a few months of payments reflecting the updated amount. This gives retirees a clearer sense of how the annual adjustment is impacting their real monthly budget. Inflation continues to be one of the most important financial pressures affecting seniors. Prices for groceries, utilities, rent, and medical care have fluctuated significantly in recent years. Even modest increases in essential expenses can strain a fixed income. This is why deposit timing and benefit accuracy matters so much. Every dollar must be carefully managed, and reliable scheduling allows seniors to plan ahead instead of reacting to uncertainty. In addition to regular Social Security payments, many seniors remain attentive to discussions about stimulus checks or economic relief payments. While large-scale federal stimulus programs were primarily associated with earlier economic emergencies, there continues to be periodic discussion about targeted relief, tax credits, or state-level assistance programs. It is important to understand that any new stimulus payment would require official approval through federal authorities. Until such approval is formally announced and implemented, regular Social Security benefits remain separate from stimulus programs. Stimulus payments in the past were typically distributed through direct deposit, paper checks, or prepaid debit cards, depending on the recipient's information on file with federal agencies. For seniors who received Social Security through direct deposit, previous stimulus payments were often delivered using the same banking information. This allowed for faster and more efficient distribution. Those without direct deposit sometimes experienced longer waiting periods due to mailing timelines. Keeping banking information updated with the Social Security Administration remains an essential step in ensuring smooth payment delivery, both for regular benefits and for any potential future relief payments. March also serves as a reminder of the importance of monitoring bank accounts carefully. Most beneficiaries receive payments electronically, which reduces the risk of delays or lost checks. Direct deposit is generally the safest and fastest method of receiving benefits. However, it remains important to regularly review bank statements to confirm that the expected deposit has arrived in the correct amount. Errors are rare, but immediate attention to discrepancies helps resolve issues more quickly. For seniors who are newly retired or recently approved for benefits, the first few months of receiving Social Security can feel overwhelming. Understanding how payment cycles work is part of building financial stability. Benefits are paid 1 month behind. This means that the payment received in March reflects February's benefit. This timing structure is standard and does not represent a delay. Recognizing this pattern helps retirees align expenses properly with income flow. Medicare premiums are another factor that affects net Social Security payments. For most retirees enrolled in Medicare Part B, the premium is automatically deducted from their Social Security benefit before it is deposited. As a result, the amount that appears in a bank account may be lower than the gross benefit amount. Any adjustments to Medicare premiums can slightly change monthly deposit totals. By March, beneficiaries have typically adjusted to any updated premium amounts that began earlier in the year. Tax considerations are also important. Some seniors may have federal taxes withheld from their Social Security benefits if they chose voluntary withholding or if their income exceeds certain thresholds. While many retirees do not owe federal income tax on Social Security, others with additional income sources such as pensions, part-time work, or investment income may have partial taxation. Monitoring withholding choices ensures there are no surprises during tax season. Beyond retirement benefits and SSI, Social Security disability insurance recipients follow the same Wednesday distribution schedule based on birth date. SSDI provides critical income support for individuals who are unable to work due to qualifying disabilities. Payment reliability is especially vital for these households. March payments for SSDI follow the same structured pattern as retirement benefits, ensuring predictability and consistency. Survivor benefits also operate under the same scheduling system. Widows, widowers, and eligible dependents who receive survivor benefits can expect their March payments according to their assigned Wednesday date. These benefits often represent a continuation of income after the loss of a spouse, and maintaining dependable deposit timing is essential for financial continuity. It is also important to address common concerns about payment delays. In most cases, when a payment does not appear on the expected date, the cause is related to banking processing times rather than a problem with Social Security itself. Financial institutions sometimes require additional time to post deposits, especially if there is a weekend or holiday nearby. Allowing a few business days before taking action is generally recommended. Keeping contact information current with the Social Security Administration helps avoid communication issues if clarification is ever needed. For seniors living on tight budgets, careful planning around deposit dates can reduce stress. Many retirees schedule bill payments shortly after their Social Security deposit arrives, aligning rent, utilities, and automatic withdrawals with known payment dates can prevent overdraft fees and late penalties. Creating a simple monthly calendar that marks deposit days can provide peace of mind and improve financial organization. Although conversations about stimulus payments continue in public discussions, it is important to distinguish between confirmed benefit deposits and speculative proposals. Confirmed Social Security deposit dates are published well in advance and follow established rules. Stimulus payments, by contrast, require new legislative action. Relying only on official confirmations protects seniors from misinformation. Financial scams frequently target older adults by falsely claiming new stimulus deposits are pending in exchange for personal information. Remaining cautious and never sharing sensitive data without verification is essential for personal security. March is also a time when many seniors evaluate their overall financial health. Reviewing monthly expenses alongside Social Security income can highlight areas where adjustments may be necessary. Inflation may require modest lifestyle changes to maintain balance. Even small savings on recurring expenses such as subscriptions or utility usage can stretch benefits further. Community resources may also provide supplemental assistance. Local programs sometimes offer property tax relief, heating assistance, or food support for eligible seniors. While these programs are separate from Social Security, they can strengthen financial stability when combined with federal benefits. Staying informed about available support can reduce financial strain. For those who continue working while receiving Social Security retirement benefits, earnings limits may apply if they are below full retirement age. Income above certain thresholds can temporarily reduce monthly benefits. However, once full retirement age is reached, earnings limits no longer apply. Understanding how work income interacts with Social Security ensures there are no unexpected adjustments. The stability of Social Security payments remains a central pillar of retirement planning in the United States. Despite ongoing national discussions about the long-term future of the program, monthly benefits continue to be issued reliably. March payments follow the established structure that beneficiaries have come to depend upon. This consistency provides reassurance during times of economic uncertainty. As this March update makes clear, the most important factors for seniors are knowing their specific deposit date, confirming their banking information is accurate, understanding how Medicare premiums affect net payments, and remaining cautious about unverified stimulus claims. Staying organized and informed reduces stress and strengthens financial confidence.